Hello and welcome to episode 6 of the Gold, Goats, and Guns podcast. I am Tom Luongo. It is Sunday, May 13th, 2017. So there's a lot to talk about since we had a pretty eventful Friday. And I really just want to get straight to it, so let's do so. All right, first things first, to all the mothers listening and to all the sons and the daughters and everybody else, happy Mother's Day. This will be the last little bit of work I do for the day before I spend time hanging out with Camille and my daughter and having a day. So let's get right to it. But absolutely, this is one of the most important days of the year as far as I'm concerned, because most holidays are government-created monstrosities to remind us of how many wars we fought or how many people have died in service of the state, and Mother's Day is the complete opposite of that. And as far as I'm concerned, it makes it one of the great days of the year. All right, let's do this. So last week, FBI Director Jamey Comey was fired summarily by Donald Trump, and it created an absolute storm. And that happened a day before Russian Foreign Minister Sergei Lavrov showed up at the White House to meet with both Secretary of State Rex Tillerson and Trump himself. And apparently that meeting went very well. Trump didn't want any pictures to circulate from that meeting, but a couple of them did leak out, and everything looked like it was pretty amicable. And that's a good sign. I mean, let's not kid ourselves. The two worlds, Tillerson is right when he says that the world's most foremost nuclear powers cannot have this kind of relationship that they currently have. To which, when he said that to Russian President Vladimir Putin, Putin just shrugged his shoulders and nodded in agreement that it's that the current relationship is awful and it's worse than it was ever during the Cold War. And you can thank the Obama administration for this, and you can absolutely thank Hillary Clinton for this. So, given the situation that we've been dealing with since Trump's been in the White House, the Democrats and all of Trump's political opponents, and I'm going to use the Democrats as a shorthand for this, but that list of people is far bigger than just the Democrats, have been hounding him and been looking for whatever leverage they can to create an opportunity to impeach him. This is ultimately their goal. There was a great article by Pat Buchanan, well-timed actually, by Pat Buchanan this week, discussing his time in the Nixon administration and how Nixon, from the day he took office, was hounded by the media and effectively what we can call the deep state, to try and get rid of him. And eventually they succeeded. Eventually they drove him so paranoid that he made the mistake that led to Watergate and yada, yada, yada. The breaking at Watergate, blah, 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 blah. So the Democrats have been trying to create out of whole cloth this Russian hacking of the DNC and this collusion between Trump and Putin, which any person with 3 brain cells to rub together and make a spark knows there's nothing there. Because if there was anything there, it would have already been proven 6 months into this. But there's nothing there. What's happening is it's simply just a big freaking psyop to keep the radical left and the kind of the lack of a better term, the anti-Trump left, happy with the idea, comfortable with the idea that Trump is a scumbag, and that that narrative is just not allowed to die because it's too useful. Moreover, there are multiple opportunities here for them to set up a potential operation or sting or something. And if Trump winds up, and if 3 or 4 months into office now, Trump is proving to be, though it doesn't look that way at times, a formidable opponent here. And so let's not kid ourselves. Anything that can link Trump to Putin in a tangible way, if manufactured or otherwise, is what they want. So the dossier that Evan McMullin passed off to John McCain about the whole, Trump and the prostitute and the urination and all that stuff, it's all nonsense. It's all garbage, right? No one believes it. Or outside of like Louise Mensch and Keith Olbermann and Rachel Maddow. And I don't even think Maddow believes this. To be honest with you, I don't even think Olbermann believes it. But he's certainly willing to, go out there and pimp this idea on a regular basis, or should I say whore this idea on a regular basis, because it fits his agenda. So enter this, and I'm saying to myself, why fire Comey now? Why not give anybody warning? Why do this the way he did it? Apparently Comey was in Los Angeles, got fired, didn't even know it, right? Saw the report on a TV set behind him while he was giving a speech and thought it was a joke. Why? Here's the story, as I best I can put it together. The picture of the man you see there is a Russian hacker who the FBI has on a number of charges for hacking Twitter and Instagram and a couple other places apparently. And he's come out on Saturday. Now this actually broke Friday night, but it was on Zero Hedge yesterday afternoon, about 1:45 in the afternoon, that Comey had offered him a deal. Roll over, confess to having hacked the DNC and U.S. election polling stations on behalf of Vladimir Putin and Donald Trump, and we'll give you everything you want. And we won't send you to jail, and we'll give you an apartment, and and everything imaginable. Now to me, this story is absolutely plausible. If this is why we have the Sally Yates hearings. This is why the Democrats continue to call for a special investigator, because it's a person that they can control. This is why Trump fired Comey while he wasn't there, so Comey couldn't destroy any evidence. This is why they're going to go after Andrew McCabe and get rid of him as quickly as possible. It all makes sense, and then it even better makes sense that the Democrats, who had been calling for Comey to be fired the day before, thinking that Trump would never do it because the optics were bad, because they keep pushing this Russia narrative that would make him loath to do so, because then they could run with the narrative that they ran with, but which is that, he's trying to do it to cover everything up and blah 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 blah. But the truth of the matter is that they had this thing set up to impeach him on these grounds. They were setting this up, and it's so obvious that this story is most likely true that it tells you just exactly what Trump is up against. Moreover, exposing it this way, and back up even one more second. When Comey's firing happened, I noticed a number of I noticed the reactions from everybody. And all the usual suspects on the left and John McCain were all, "Oh my God, this is awful! It's Nixonian! It's Hitlerian! It's I can't believe he did this." Except for Lindsey Graham, South Carolina Senator Lindsey Graham, who has been virulently anti-Trump since the moment the man announced his candidacy. Now, why is Lindsey Graham not on board with John McCain and everybody else? Because Lindsey Graham realizes that that what I'm spinning is exactly right, and that Trump is gaining control of things in the White House, despite counter narratives to the narratives to the counter that he's going to go out this morning and fire everybody because he's all ticked off with Bannon and the previous. It's nonsense. He's probably pissed off with some of them. I doubt he's pissed off with Bannon. And so, and adding even more credence to this, if you read the article that was on Zero Hedge about this guy's extradition treaty was due on the Thursday. It was due to happen on Thursday. That got postponed until May 30th for a variety of reasons. Now, Lavrov is there on the 10th. His extradition treaty gets postponed on the 11th. Comey is fired on the 9th. And then this story comes out, and then he comes out on Saturday or Friday night, comes forward and says, what happened? Now, the only reason he's willing to come out and say what happened is because he now has cover. Someone is protecting him. Putin, Trump, whatever. Doesn't matter. The FBI is no longer, this thing is no longer on his head. Moreover, if Putin and Lavrov gave Trump this, and this is why he fired Comey when he did. Because this actually now creates an entire backdrop to neuter some of his political opponents. This could wind up being, even if it goes nowhere in the press, it could wind up being the basis by which the FBI starts to go after all the usual suspects. at a minimum, it could neuter the vindictive John McCain. Because if McCain can be directly implicated in any of this, then Trump now owns John McCain. And if Trump owns John McCain, that means we're going to get tax reform. We're going to get all the things that have been delayed because they've been trying to set this up in order to impeach him. I think this might wind up being the biggest story of the year. We'll see. All right. So I've got even more to discuss on this. We discussed it yesterday on my Periscope, like 20 minutes or an hour after, about an hour after the story broke on Zero Hedge. And I want you to understand that this is what Trump is up against. And this is very, very interesting. It has huge implications that Trump may have to pay back Lavrov and Putin in a serious way. And knowing that we're looking forward now at sanctions, acceptance of the reunification with Crimea, that Russian diplomats and representatives from the two breakaway republics, the Donetsk and Lugansk in Ukraine, are discussing reunification there as well. There's been a lot of smoke there for weeks now. So this all has tremendous potential. All right, because Putin may just have saved Trump's presidency. If my read on this is right. All right. So then on Friday we had a setup. Let's move off of that and we'll talk about what's going on in the markets, because what we had on Friday was we had a setup in. I'm not going to show you the chart on it, but we had a setup in the euro to have a significant, at least weekly technical breakdown. And we didn't get that because the retail sales number was just terrible. It was awful, and which I'm not surprised by. I mean, and I've been talking to some people about this behind the scenes and subscribers behind the scenes, and we've been discussing just how bad the retail numbers are and store closings that are going to happen this year and all this. And I've been talking about this for a long time. The numbers, the idea that Subway for the first time in 53 years is going to close 360 stores in the U.S. This is unprecedented in the company's 53-year history. So it's a well-run private company that's expanding overseas and having to contract 10% of its stores here in the U.S. Do the math, okay? Commercial real estate is a mess. Car sales are falling off a cliff. It's the car sales are really starting to contract here. We're reaching the point where the American consumer is completely tapped out, and costs due to Obamacare are the issue. And they really are. That has the change in people's budgets over the last year and a half, 2 years, with the advent of Obamacare, has destroyed disposable monthly income, and we're seeing it in the retail sales numbers. And as retail sales numbers start to really contract, and people have to spend all of their money on just survival, then we're not going to get any kind of great revival. And even if online sales are expanding, but they're not expanding at the rate that brick and mortar retail is contracting. And got news for you: there aren't billions and billions of dollars in loans and revenue streams for pension funds and annuity programs and insurance funds and everything else that are based on, Amazon leasing its warehouses. It's based on strip malls and commercial malls and all of that stuff. That's where there's a lot of money tied up in that. There's a lot of investor money tied up in those income streams. And if those income streams really begin to dry up, it has terrible consequences for a lot of bond funds and mortgage-backed securities, asset-backed security funds, and stuff like that, and commercial real estate in general. So, and there will be then knock-on effects into housing and everything, into residential real estate as well. All right, so know that the market reacted strongly to the retail sales number for these reasons, and sent the dollar tumbling, sent the euro rising, sent bond yields falling. And the stock market, the stock market looks for all the world right now like it can't move up, and it really wants to move down. I think the same thing is happening in oil. And I'll show you the chart on oil in a minute, because the U.S. rig count continues to rise along with output. This is not bullish for oil prices in any way. So what we're starting to see is an honest-to-God stagflationary environment where the Fed is raising rates into stagnant wages and rising basic consumer cost. And this is a recipe for a very similar scenario that was we had in the 1970s. And we have both we've had commodity deflation and asset inflation, and that will continue while wages are stagnant. That will continue. And at some point we've got a bottoming really in commodities at this point. They're starting to rise. I mean, I still think oil is going to drop a little bit, but we're not going to have, we're not going to see sub $20 oil. We don't see even more deflation in oil. We'll just see it back off in this $47 to $50 range, maybe back into the high 30s, and then vacillate between the high 30s and the high 50s the low 50s while we move forward. So, the idea of $125 a barrel oil is so far removed from reality at this point. It's not funny. We're seeing it in the shipping. We can see it in the shipping container markets. We can see it in a variety of other areas. So, I really do think we're setting up for a kind of a stagflationary environment with rising costs, rising consumer costs, and then soon to be with stagnant wages, and soon to be we're going to see increased deflationary pressures as well. So, as a rising dollar, which is this move down in the dollar on Friday, is not significant. It's delaying any downside reaction in the euro and the European markets for another week, maybe two, maybe even a month. But because the long-term trend is definitely bearish on all of that stuff. It's the question is those markets didn't start to fall apart this week. That's the takeaway. All right, so where are we in gold? Because we do gold we do a gold update on every one of these. So gold did not have a good week, but it did close strongly on Friday on a safe haven bid along with bonds, along with the U.S. Treasury bonds. What I want to see from gold this week, and since the gold market hasn't opened, we don't have a bar for this week yet. But what I want to see from gold this week is a move. I don't even care if we get I'd like to see a daily close, but even just a move to the upside above 1237, just to break that high, because then that would drastically lower the probability that we're going to drop below 1215 this week and extend this downtrend. We may actually be able to stabilize, and a move above 1237 at any time this week, and a daily close would be even better. Would help stabilize in this region, and then we can trade sideways for a little while it makes another attempt to go back to 13, or falls off a cliff further later on. But at the very least, we stabilize for a few weeks and get our bearings. Otherwise, if that doesn't happen, then the probability, because we're in a downtrend, is for another move down to 1200. And Friday's close, the couple day respite we got from the selling in gold will continue. We'll start back up again, and this was just nothing but a little short covering rally. I'm not sure that that's the case though. But here's the gig. Looking at silver, we got a significant move in silver off the bottom. This is a daily chart of silver, something I rarely put up, but I had to show the spike bottom in silver. It wasn't really instructive in gold. It was more instructive in silver. Now this isn't a particularly strong reversal signal. It took 3 days to finally close above this last down bar. So this is a 3-bar reversal, which is very weak, but it does put silver in the range right now of the horizontal resistance in here. And I would say, looking at this chart, that the most significant of it, significant peak right here is this move at this high at 1653. So if silver can get a daily close above 1653, that should give it enough impetus to move back to 17. Okay, I don't think there's a trade here, right? The trade was Tuesday buying the spike low near 16, and then looking for a small short covering rally for 40 or 50 cents. But that was way too high a risk to reward ratio in my mind, because there still could have been another 40 to 50% drop, 50 cent drop, not percent, but 50 cent drop down into down to around 1575, 1580. I didn't want to, I wouldn't recommend that. I don't recommend that there. And really, the spike low on silver wasn't available during the U.S. market anyway. So this is very typical for what happens in gold and silver. Being able to grab those bottoms like that, they usually happen when the American market is closed. I tell people all the time, don't trade gold and silver. Trade something easy like Microsoft. It's much easier. So, if you're going to day trade, I don't recommend day trading gold and silver at all. All you'll do is get whipsawed out of your position while the market is closed. You sleep more than the market is closed. Therefore, you can't position yourself. You just can't do it. It's just not possible. All right. So, all right. Most people don't have. You have to sleep an hour a day to trade gold and silver. So, directly. All right. So that gives me hope that if you get that break, today, that gives you the possibility that gold will probably stabilize and probably push towards 1240. I would say that that's a reasonable bet to make. But again, I don't think there's a trade here. If you didn't short gold at 1300 or short silver at 1850, I wouldn't. Silver is more of a buy right now than gold is on a speculative bet, but I wouldn't buy either of them. All right, and the last thing I wanted to show you was the oil markets. I usually put up the chart of Brent crude because I'm more interested in how oil trades internationally than I am domestically, but there's a clearer signal. The charts look almost exactly the same, but there's a clearer signal in WTI crude as opposed to Brent. And what I mean by that is this bar here closing below this triple bottom. Remember, this is a weekly chart. Is telling me that this is now a well-defined downtrend. And the only way you're going to break that well-defined downtrend is to get a reversal signal like we threw here. And notice that reversal signal just ran into resistance, right? So we got a reversal and a rally, and we ran right into all this buzzsaw of resistance between $48 and $50 a barrel, or between $53 and $55 a barrel, right? Market is not interested in that. With rig counts rising and U.S. Production rising, and the Russians continuing to pump, and OPEC, the OPEC saying the right things but doing the opposite. The world is glutted with oil, and that's just the way it is. And it's cyclicals are against you. It's May, yada yada yada. We're past the heating oil season. Seriously. Oil, WTI needs a close above 49.32, which is last week's high, this week to throw a 2-bar reversal and make another attempt at $53. Otherwise, we're going to continue to go lower. And I would think that's more likely than anything else. And, you've got 45, you've got 43, you've got the spike bottom here, whatever this is, about 43.50. And then obviously you've got 40. I don't expect to see, there's plenty of support for oil between $47 and $40 on this chart. No doubt. But this is a breakdown. And, in classic sense, right? I mean, some people still use in technical analysis, they use, this is a flat top and, and this is a bearish, this will be a bearish rising wedge pattern that broke down. And I'm not a big fan of that stuff, but I know some people still use those. Some people use them, but you can see how this is a great example of, in hindsight, this is a bearish wedge pattern that's broken down. And that actually helps to give you some understanding that, because if you were to draw, a line from this high and that high, and then draw a line through these lows, you would draw a kind of a wedge triangle shape here. And we're trading below that wedge, and we got a breakdown. And we got that breakdown last week. So it's another way of looking at it technically, but it's just not a fan of drawing lines on charts like that, because they just get you into trouble as you start looking for those things to happen. And then when they don't happen, and those signals are only right 55% of the time, that's not enough of an edge to trade off of. So, okay, because for every rising wedge that fails bearishly, there's another rising wedge that then turns into a flag and then breaks out higher. It's nonsense. It's horse shit. So, all right. That's pretty much what I had for this week, for this Sunday. So why don't you guys stop listening to me, and I'll stop talking, and you go and hang out with your wife/mom and family, and have a great afternoon. And like always, keep your stick on the ice.